Good morning and good afternoon. I had retired from doing financial statements review of listed entities, except if there is something interesting that I noticed in the financial statements. Unfortunately or fortunately, today DFCU has released its summarized financial statements for the year, and a few things caught my attention. Now, one of the things we're going to talk about is their profits after tax have almost tripled from 28 billion to 72 trillion. I believe the new chief executive, Charles Mudiwa, is doing an incredible job. But that for me, that's not where the gist is. And I believe the profit after tax are mostly driven by what you are seeing here, that their loan losses have reduced from 82 billion to close to 12 billion, which means they are going down. But what is most interesting for me, especially for the people who are interested in investing in the treasury bonds, is this. This is their balance sheet. And the banks are shifting. The banks are shifting their focus. Let's first go back to 2022 financial statements. In the 2022 financial statements of DFCU, um, there are two things which I want us to pay attention to: the investments in government securities and loans and advances. What these two things mean: the first investment is investments are the loans they give to the private sector. The second are the loan they are giving to the government. In the 2021, they had 1.5 trillion of loans to the private sector, and it reduced to 1.3 in the 2022. The government investment in government securities, they were close to around 340 billion, which which increased to almost doubled to around 650. That was in the 2021 2022. Fast forward, pay attention. This is 4 years ago. Fast forward in the 2024. This is the line in government securities. This is the line in loans and advances. Now, what the banks have decided is they have said that we shall make money where money is. Investment in government securities has almost tripled, actually four times what it was in the 2021. In the 2023, they were at 968. Now they're at 1.3 trillion, while the loans and advances to the um, private sector are taking a dip. Nothing to do, that's okay. But you have to sit back and say, if I'm the customer of DFCU, why am I not also taking advantage of that? The banks have embraced where the money is. For the first time, I'm seeing a bank where their investments in government securities are more than their loans and advances to the private sector. And that's interesting because when you come and look at their income statement, all of a sudden you can see what's happening. Interest income on loans and advances is taking a dip, as the interest income on government and other securities is taking an increase. Now that means they every single day they are lending more to the government, they are through treasury bonds and treasury bills, than they are lending more to the private sector. Business decisions have to be made. You just have to sit back and be like, okay, for me as an individual, if banks are doing this, why can't I do that? It's a business decision. I applaud them, because if as a bank they have managed to increase their profit after tax, you know, from 28 billion to 72 billion, you would expect their shareholders today to get a good dividend. So it's a business decision. I respect it. The only difference is here is for someone to sit back and be like, okay, if banks are taking that route, if the banks are taking that route, why can't I take it? If the banks are making almost 160 billion in interest income from investing in government securities, and if this trend continues, it means in like 2 to 3 years, the investment interest on government securities would have overtaken the loans and advance interest, you know. And if this trend continues, you can see while the loans and advances are taking a dip, the investment in the government securities increased by close to 400 billion, while this one is taking a nosedive. And it doesn't even include even the cash and bank balances with the Bank of Uganda, which is part of their mandated balances they must put there. So there is so much we can learn to make a decision. There's so much we can learn to make a decisions based off what the banks are doing. But DFCU's interests, their financial statements were interesting to realize that for the first time, you are seeing a bank that has decided to make money on where money is being made. And do I like it? Maybe not, because all of a sudden it means the private sector is being curtailed. It doesn't have that much cash to invest. But that's how sometimes businesses are. Not everything is going to work in the directions we want it to work in. So if you are an investor, you want to think, you might want to follow the big boys. Thank you.